Hi, everybody. This is Josh Nelson and Jeremy Bush from Keystone Financial Services. We've got people still signing in right now, so we'll wait a few minutes here before we start any content or answering questions or anything. But we're all working from home right now. That is different for sure for a lot of us. For a lot of you, probably not, right? We know a lot of clients are in the high tech community and have probably been doing this for years. So for you, it's probably no big deal. But for us, we've been getting ourselves all set up and we've got the technology and certainly we're used to doing virtual meetings anyway, clients all over the country. But yeah, glad that you tuned in today. We've been doing these Q and A's every Monday morning, and we'll continue to do them every Monday morning until things start to settle down, which I think we would all agree probably will be a little while, right? There's going to be some time that goes into this before we really know the extent of the damage, certainly as far as how many people were actually impacted by it. And well, I shouldn't say more importantly, but I think in relation to finance, right? I think people are wondering, well, what's the economic damage behind this, and how do we get out of it? So that's a lot of what we're talking with clients about, certainly. And then on these calls, I think that's where some of that's starting to shift. So it's 9 a.m. right now. We're going to we'll give people a few more minutes to sign on here. We've got a bunch already on, and 15 every couple seconds here, more people pop on. When we get going here, we're going to go through a few pieces of information from the forecast. And it's kind of fortuitous that a lot of the stuff that we designed and put in there, it didn't necessarily predict this at all, right? We were talking about the coronavirus, but nobody knew that it was going to get this crazy. But it talks a lot about how do you behave, though? What are the behaviors? What are the things that we can learn from really smart investors, right? Like Warren Buffett, other people like that that just have a long, long, long history of being successful. What can we learn from them? So that's really where a lot of our conversations are going right now, is that. So yeah, we'll go ahead and knock a couple of things out here at the beginning just for housekeeping. There is a questions feature for those of you who haven't been in GoToMeeting before. There's a questions feature, and certainly we want this to be a Q&A, right? That's the point, is for people to be able to get their questions answered. Certainly, and then also there's a chat feature, and so if you need to speak to us during the presentation, just for sake of to kind of corral the chaos, right? We don't have anybody's microphones on, but Jeremy and myself, you can see us, and we'll go through questions along the way. Jeremy is our tech whiz, and so he's going to be watching as the questions come in. And as we did last time, too, it's kind of interesting. A lot of the questions seem to come in themes, right? They tend to kind of come together in themes, and so we'll try to kind of bunch those up along the way, and we'll have you out of here no later than 1 hour from the start. This is also being recorded, just so you know. We will make a version of this available afterwards, because we know there's a lot of people that have to work at 9 a.m. Mountain Time on Monday morning. We know they're at work. Or if you've got kids at home, you might be homeschooling your kids, right? That's going to be a new thing for a lot of us as well, is adapting to that and adapting to just our day-to-day life. Isn't it crazy, really, when you look at the last 4 weeks? I mean, really, it's been about 4 weeks, I think, since we hit all-time highs in the market, record low unemployment. It looked like, this actually was shaping up to be a pretty good year economically and certainly for the market. And then this happened, right? Pretty crazy. I think a lot of us on a day-to-day basis, of course, we're adapting and staying positive and everything, but I don't remember any time in my life where we've had to make this big of an adjustment in our day-to-day lives, even after 9/11, the financial crisis, things like that. As crazy as those were, I don't know that it had such a universal effect, though, right? This literally affects everybody on the planet. So, there's a lot of uncertainty, right? And I think that's why we're seeing the markets so crazy over the last few weeks, simply because markets hate uncertainty, kind of like how airplanes hate turbulence. And many of you have heard that example from me in the past, is that, nobody likes turbulence, right? I don't think anybody enjoys that, but it is part of the ride when it comes to the economy, to the market. We can try to avoid it as much as we want to, but that is part of the ride that we're on here as being part of the world economy. So sometimes there's a lot of turbulence and it can get really violent. And certainly that's what we've seen the last few weeks, with extreme uncertainty, not only from a health standpoint, right? I think everybody's trying to hunker down and figure out, how do we function, right, in our normal lives until this settles down. But then also the markets are reflecting an awful lot of fear, certainly. And the fear, I would say, is also uncertainty, right? It's uncertainty of what's going to happen. And so a lot of questions come in. I'll kind of start right off the bat. A lot of questions come in about, so, what is it going to take until this kind of bottoms and things get better? Well, my belief is a couple of things. Number one is that we need to be able to have an accurate view of the actual damage, right? So we need to have the actual cases peak and to be able to see how are we actually impacted, how many people actually got sick, how many people passed away. So and hope, right? Once those actually peak, some hope that this is actually getting better, right? This is starting to subside, and there's some hope that we can not only maybe not be quite as afraid from a health standpoint, but also to be able to just trust that, hey, the economy is going to recover here. I talked to a lot of small businesses, churches, other people this past couple of weeks, and there's a lot of opportunity certainly to be able to help out and to be able to adjust. But that's one thing that we want to make sure that we keep that in mind, that we do have hope on the other end of this. So
Hey, Josh,
a couple of
real
things.
quick, you got a Outlook reminder on your screen there that everybody can
Oh,
see.
yeah, that's funny. So, oh, for the market volatility Q A. Well, that's
There you
handy.
go. I think we're here.
Let's see if I can close. There we go. Gone?
Gone.
All right, sounds
Looks good.
So, but let's actually jump into the presentation. So part of it, sorry, one more thing related to that, and then also the fiscal side of things. And certainly there's a fiscal response, a monetary response that's very appropriate for this situation because it does impact everybody and because businesses are being forced to shut down in a lot of cases, right? Businesses that may not have the ability to continue functioning. Now, at Keystone, we're pretty blessed in that we can all interact remotely with our clients. Really, there's been no interruption in service at all. So not a lot of impact there. Certainly an impact because of the markets, right? We're definitely seeing an impact there and certainly trying to guide our clients through this. But for a lot of businesses, think of airlines, think of restaurants, think of gyms. What business isn't impacted by this? So it's certainly appropriate there's a fiscal and monetary response because a business may have had to shut down. That's not necessarily their fault, right? So it's definitely a different situation in that a survival of the fittest really isn't an appropriate way to get through this. There needs to be some kind of fiscal and monetary response. The Federal Reserve, because they can act, without a lot of checks and balances, right? They can act pretty quickly, and they have very decisively to lower interest rates and also to ramp up quantitative easing, which means that they're buying a lot of stuff. They're buying a lot of securities, government securities. They've ramped up even now where they're saying that other assets normally that they wouldn't buy, like municipal bonds, maybe even stocks of companies, we haven't seen that since back in 2008, right, where they were talking about bailouts and so forth. And then the fiscal side of things, certainly there's an appropriate amount of money that needs to be spent to support small business owners and even big business owners, right? There could be airlines that go broke. There could be car companies that go broke as a result of this, depending on how long it actually lasts. So we'll go through a couple of different things here on the slides, and then we'll open it up for questions. But again, remember that there is a questions box. So as you're thinking of questions along the way, certainly throw those in there. I may answer some of those along the way. So that's fine. But Jeremy, I'll kind of moderate that and then cluster them together here. So, all right. All right. So, Jeremy Bush and myself, the other thing I wanted to throw out here is that we have a disclosure that you need to see. And this is for the attorneys, of course. We need to tell you from a compliance standpoint that anything that we share today is just from Jeremy and I. It's our opinions in a lot of cases. And it says here there's a lot of things that aren't guaranteed. Well, you probably say, well, duh, right? We've learned that in the last few weeks if we didn't know it before. But it is important to just recognize that we don't know what's going to happen, and neither does anybody else. So with regard to what's happening in the economy and the world, we've got faith that things will be okay in the end. But I can tell you that I was at a finance conference about a month ago right now, and Ray Dalio, who manages the largest hedge fund in the world, Paul Tudor Jones, who's considered one of the top 5 traders of all time, they didn't even know, right? And coronavirus was even being talked about, right? As far as global impact and everything, they didn't know that it was going to get this bad either. Hopefully that's some comfort, I think, to all of us that nobody saw this coming, at least to this extent. So let's talk about where we've been, where we are, where we may be going. A few slides here. I'm not going to go through the whole presentation, but this did come from our forecast presentation, and some of the stuff here is still relevant. The one thing that I did want to throw out here is that 2019, you might remember, was a great year for the stock market, and that was reflecting a lot of good news economically. We're in a very, very good place that we haven't seen for a long time, right? And there's various reasons for that, but a big part of that was low unemployment. And it's a good thing because 70% of the economy is just us spending money on stuff, right? So that's a big, big deal. That's part of the fear here, certainly, is that how many people are going to actually be unemployed by the end of this, and then how fast are things going to snap back, really, when the worst of this goes through and businesses are able to start operating like normal, people are starting to be able to travel and just interact like normal. How much damage would have been done, and was the fiscal stimulus, right, that was pumped into the system, was that enough to be able to bridge a lot of that gap? In other words, how fast will spending come back? That's a lot of the unknown right now. So definitely was a good year. It was kind of a hard year not to make money, actually. When you look at asset class performance, pretty much everything was up last year. You would have had to just own something really bad, I guess, to not have made money last year. The previous year, it was kind of hard to make money. 2018, we might remember that 2018, actually, we had a baby bear market. It was the very end of the year, but the market dropped just shy of 20%, right? It might as well have been a 20% drop. 10% is a market correction, 20% or more is a bear market. Clearly, we're in a bear market. About 80% of the time, corrections snap back and they don't become bear markets. But in this case, we've got one. Historically, for those of you who like stats, corrections happen about once a year, so it wouldn't be unusual to have a correction. Bear markets really come around every few years or so, about every 3 to 5 years historically. And some snap back very quickly, and that's what we're hoping in this case, of course, is that this is going to be dramatic and crazy and everything and disruptive, but that the second half of the year, that a lot of spending, a lot of pent up business activity will snap back and we'll get back on track again. So global stock markets, most areas of the world last year actually saw positive stock market returns. Now, right now we're seeing big losses, right, in the stock market pretty much all over the world, right? There are little pockets, little areas that you see stocks that have actually gone up in value, like Walmart, for example. There's a few things that actually have gone up, but for the most part, things have reversed course and we're down. Very different than a 9/11 situation that impacted other countries, certainly, but in the United States, really, it was kind of isolated to us. That's why I think this seems really weird to a lot of us right now, is that this isn't just a United States thing. This isn't a pocket where just we're impacted. This literally is everybody. So I did want to touch on one thing, and then we'll kind of pop over and see what kind of questions we've got for right now, is that when it comes to money decisions, people are not always rational. And it seems kind of weird too, because especially with us, we deal with a lot of IT workers, we deal with a lot of engineers, physicians, people like that, right? That all think very logically, right? But the reality is that most people financially, they are influenced by their emotions. And so they're not always rational. And it's certainly something that there are reasons why the market's down right now, but I think there's also not only a bear market in stocks right now, there's a bear market in fear and people's emotions. And so that's one thing that we do need to be careful about individually, is that Jim Rohn, those of you who may remember Jim Rohn, he was a big personal development guy back in the day. He's passed away a long time ago now, but he said that we're each responsible for being the gatekeeper of our own minds. And I don't know about you, but right now it's kind of hard. It's kind of like a train wreck in some ways. It's like, how do you not watch, right? How do you not stay plugged into social media and the news and everything? But it is healthy for us to take breaks from that and be informed, certainly. But the more we watch that stuff, and we know that the media, even during good times, they know that bad news sells. And so there's a 17-to-1 ratio of negative to positive news stories during any given time. And that's liberal media, conservative media. It doesn't matter what you're looking at. It's overwhelmingly going to be negative. And so we don't want to get ourselves involved in that bear market of fear. on top of the bear market in stocks that we're seeing right now. And then last slide here before we pop over to some questions, Daniel Crosby, who Jeremy and I follow pretty closely, he is a behavioral finance guy. So that's his area of finance, is behavioral finance. And that's an area that relates to kind of people's behavior and how does that relate to actual outcomes, as far as what are the actual success habits that result in people being financially successful over time or not. And there's two different ways you can learn, right? One way is just by trial and error. We can learn how to do something. The other, and this is where our podcast that's coming up here soon called Wiser Financial Advisor, that's really the entire theme of the podcast, is how do we learn from other people? How do we learn from people who have gone before us? People like Warren Buffett, for example. I'm not sure if I'll get Warren as a guest on the show. Wouldn't that be crazy? But nonetheless, though, there's a lot that we can learn from him. He's pretty prolific, and there's a lot of books been written about him, certainly probably more than any other investor of the last 100 years anyway. He's probably the one that's been profiled the most. And there are patterns of success. There are patterns of success, and there's patterns of failure too. So what we want to avoid, of course, is making mistakes, behavioral mistakes. That's what Dr. Crosby's quote here is related to. So I'll hit pause for just a second. And Jeremy, do we have some questions, or do we have maybe some themes around some questions that we can pop into?
Yeah, so far we have 3 pretty good questions. They're kind of all along the same lines, but I think we address them individually. They're a little bit different from each other.
Okay.
So the first one is, how low will the market allow itself to go, and are there any mechanisms to keep it from totally collapsing?
Okay. So I guess we'd have to define what totally collapsing means. The one thing I think we can know 100% of the time, that every bear market that we've ever had, even back to the Great Depression, the 1929 crash, is that every bear market's been followed by a bull market. So I think that most people know that intellectually, but emotionally, when we're seeing these big drops in the market, sometimes people wonder how low will the market go, and is there anything that would keep it from collapsing, crashing, whatever that is. So you go back to the 1929 bear market, that was down like 78%, something like that. I don't know the exact stat, but pretty close to that. So that's the worst that the market has ever dropped, would have been back in the 1929, 1930s during the Great Depression. I don't think that we're going to come anywhere close to a Great Depression scenario. I just don't see this being a situation where economically we go into some funk for 10 years. I just don't see that happening. I think this is situational, and the virus is going to pass like all of the others. So the interesting thing is that we've gotten very few calls and emails from clients this last week. We've reached out to everybody, but overwhelmingly the common theme is that actually people are not even worried about the market. Really, the more the worry right now is about, well, what can we do? Where can we help? What can we do for our families, for our health, and so forth? And regarding finance, a lot of people have been saying, what do I need to do for my own portfolio during this time? Knowing that I think most people think that we're going to snap back from this, right? And hopefully quickly. Some are predicting a V type recovery where we saw just this absolute collapse, right, in economic activity that we're experiencing right now, and that things will pop back just as fast later on in the year. I don't know about that. It might be more like a U. And so the question really is, how long is the bottom of that U? So I think that's what the market is trying to figure out right now. But related to that question, though, sometimes people wonder, well, is there a bottom, or is there some guaranteed way that the market doesn't go down a certain amount? And the answer is no, because the stock market is just a reflection of kind of collectively everybody's opinions at any given time, any millisecond, as far as what a company is worth in the future. There's a prediction that's happening. When you see a stock price, that's a prediction of the future of what that company will be worth and what their earnings will be. So stock prices are reflecting right now that earnings for most companies are going to get hit pretty hard this coming quarter, maybe a couple quarters. So subsequently, stock prices have come way back down. As that reverses course over time, stock prices will pop back up because people will have hope and optimism that, all right, well, maybe the worst is behind us at this point and we'll be moving forward. So no, there's no guarantee that the market can't go down a certain amount. What I will say though, and we just saw this, Jeremy and I were visiting before the call started here, but the Federal Reserve, more or less, we can't say the word guarantee, but more or less they've stepped up and said not only are we going to be making kind of our traditional asset purchases into treasuries, but we may be moving into other areas too to put a backstop on this, which could include things like municipal bonds or maybe even stocks, who knows. So I think we can say that the monetary side of things certainly does not want to see any kind of a collapse or a financial crisis or something like that. So they're pulling out all the stops right now to make sure that that doesn't happen on the monetary side. On the fiscal side, there's already been legislation that's passed, and there'll be a bunch more that gets passed before this is over. And that's one thing that the president and Congress actually, up until this point, at least have been able to kind of put aside differences. And who would have known that, right? That would have happened. They put aside differences and worked really hard to get some legislation passed that will help support the economy and certainly support individuals and support businesses through this. A big part of it, of course, is unemployment. And seeing that spike and seeing people with less dollars in their pockets actually exacerbates the economic malaise that we're surely in right now. And certainly we want to be able to come out of this. One of my friends actually works for Amazon, and he said they had an all hands meeting this last week, and he said that the mission of Amazon right now is to continue to support the small business community so they can survive this. So that's really cool. I think that not only the government stepping up right now and doing what they can, but a lot of the big companies like Amazon. This isn't an Amazon commercial, but a lot of companies, and I'm sure for a lot of you that work for big companies, that you've all got efforts going on right now to be able to help where you can. But I think it's pretty cool, some of those stories that are there, and just the solidarity that has has really come up in the last couple of weeks. It's something that we haven't seen for quite some time. I don't remember seeing it again since like 9/11. People come together like this, and businesses come together like this. So it is one of those things. To just answer that question clearly, no, there is no guaranteed amount that the market will have some backstop. But I can say that there is certainly an incentive from the Fed, because that's their mission, is to keep the money supply stable, to keep unemployment as low as possible. So that's their entire mission. And then from a fiscal standpoint, the politicians, right? They've got different motivations. Some of that should just be that they're good people, right? And they don't want to see the economy tank. But the other side of things too is that this is an election year, right? And so I think everybody, unless they're not running again, right? I think they all have a pretty big incentive right now to make sure that this is handled as good as it possibly can, and that our economy doesn't just tank and have a long, long U. And that's kind of what we saw in the Great Depression, is that not only did the market and the economy tank, but then it was down for a long, long time, years. I don't think we're going to see that. I just don't see that happening in this case. This is situational. We're going to get past it. We're going to get past that peak, right, of cases. It sounds like there's some promise already for some different treatments, some vaccines that'll take a little while to get going, but it sounds like there's already some hope that that stuff is coming online. As more and more of that envelops, I think you're going to find that people have more hope and are actually looking more forward to, here's where we're going. We can see the recovery. We can see where this is kind of bottoming out, and we've seen the worst of it. I think personally, that's where we're going to have bottomed out in the stock market. And pretty quickly, people are going to be looking for, how do we get out of this? From a business standpoint, how do we get things ramped back up again? Consumer spending again, people getting back to jobs. If they've lost a job, popping into another job. I think you're going to find that activity is going to pop up considerably, and we're going to see a nice recovery.
Yep. We got another good one here. I'm sure this is probably on the minds of a few people. What happens if they halt the market trading, and does this affect IRA/401k withdrawals? And if so, could the market be halted for an extended time?
So it wouldn't be unprecedented for the market to close temporarily after 9/11. That was one time. I can't remember how many days. Maybe Jeremy, how many days the market was closed then?
Off the top of my head, I don't remember.
Yeah, I don't think the market ever closed during the financial crisis. Yeah, and then, that was a 58% drop from top to bottom before the market bottomed out. That's October of 2007 to March of 2009, just to put it in perspective. But yeah, the market never closed, right? Now, could that happen in this case, especially in New York, right? Not that that's the only place that stocks are traded, but depending on how crazy things got, there could be, yeah, it could be that the market closes for a while. I don't think that's something that would last a whole long time, because a big part of this too, right, is that this is shaking everybody's confidence, right? This is shaking a lot of people individually. It's shaking their confidence, and certainly in the business community. So that would not lend itself well, I think, to there being um, to shutting the stock market down for an extended period of time. I think would end up shaking a lot of people's faith and could actually do more harm than good. Who knows? But I don't think that would be likely.
hmm And also to kind of go on top of that, does it affect IRA 401k withdrawals? My 2 cents on that is that it's kind of two different things. If we have sufficient liquidity or cash needs inside your account, the banking system is separate from, say, the trading system, the market itself. And so you should always be able to get cash out of your account if there's cash sitting in there. Now, if for whatever reason, and I'll have Josh chime in on this too, is that if everything was in stocks or whatever and you were unable to trade them, would that affect being able to take withdrawals? Potentially, but again, the likelihood of that happening, I think, just from a confidence standpoint, that's going to be the last thing anybody wants to do, is actually shut down the market entirely and not have
Yeah,
withdrawal.
or certainly shut down all the banks.
Yeah.
Yeah, if you want to see an all-out panic, I mean, you would shut down all the banks. And yeah, I talked to several bankers this last week, local bankers, and that's their mission right now for sure. Is they may have reduced lobby hours, things like that, but their mission for sure is to keep people's confidence up that hey, your money is safe in the bank, and not that your investments are in the bank. Just to be clear, right? Investments are investments, and they go up and down in value, but the banking system, it would be extremely unlikely that would shut down for an extended period of time. So,
Absolutely. And so here's another one. This one's kind of unrelated thus far, but are you hearing any wisdom about buying or selling real estate in the face of this storm?
Yeah, good point. A little bit. I have a friend who's a realtor, and I called him last week just to say, yeah, how are things going? Right. I've been calling all my friends and clients and people that I know that are business owners, and realtors are business owners, and he said, yeah, there's no slowdown in activity he's seen. He's said it's actually his busiest year he's ever had. So, uh, yeah, he's still cranking away right now. As far as house activity, I would say that the same theme that we've seen, at least in the local markets in northern Colorado, is that at the higher price points, it's taking longer for those to sell, and there could be some reduction in price on those, but for lower price points, there's still a lot of buyers. There's still a lot of demand right now. And although there's certainly going to be a lot of people impacted by this directly, as far as job losses or getting paid less than maybe what they were expected to get paid, there's also a lot of people that aren't impacted, right? If you work for the government or if you work for a big company and you're salary based, especially if you're involved in this, right? If you're at UC Health or something like that, that you're directly on the front lines, right? I mean, your organization is very involved in the solution to this. There's a lot of people that are still looking for houses, and I haven't seen any difference there. As far as real estate opportunities to buy, um, we haven't seen a price collapse right there. So if somebody was looking to get a really good deal, I guess you might get lucky. As far as in the broad market, certainly the real estate sector has gotten hit. There are real estate investment trusts, which are real estate companies that trade like that. Are there opportunities there? Well, sure, right? The prices there are down just like everything else. There's been no sector that hasn't been impacted by by the downturn. So the one thing I can tell you though is that as much as we have faith that things are going to pop back in the future, one thing to be careful about right now is to keep plenty of liquidity. It's very important to keep your liquidity, keep at any given time. We always say this is that people should have a minimum of 3 to 6 months worth of living expenses in cash. So that would be a big mistake, I think, right now for somebody to say, well, I'm just going to drain all my resources and buy stuff. And I know that wasn't the question necessarily, but
Mhm.
I'm just going to drain all my resources and buy stuff and then have no liquidity. That's never a good idea. It's always good to have that cash buffer for times like this. And we have had a number of clients that have called us and said, hey, stop my withdrawals, right? If they were retired, stop my withdrawals. I don't want to take money out for a few months, let things bottom out, and I don't want to see any more damage in my portfolio. Other people are saying, hey, I want to buy. Really, I want to be buying in right now because prices are so low. And certainly people have been doing that. Again, I would not do it as a all-in thing where somebody just took all their cash or something like that and invested. But are there opportunities? Well, yeah, some of the best companies in the world now are trading at huge discounts, right? A lot of tech companies that we would have considered and still consider some of the best companies in the world are at huge, huge discounts. And before this is done, they might go on discount a lot more, right? There's no guarantee that things won't go down more before they go back up. And certainly in the next couple of weeks, I think a lot will become known. Certainly from a health standpoint, I think we're going to know a lot more as far as cases, mortality rates, and spread and everything. So a lot of uncertainty. I think the market will continue to be very volatile for quite some time.
Yep. And in addition to that too, yeah, real estate is always part of a well-diversified portfolio, but well, I don't think we'd want to go out and just buy real estate just to buy real estate. We'd always want to make sure that it fits into your overall portfolio and long-term goals.
Sure.
Not wanting to get into that kind of situation.
Yeah.
Um,
One risk
and
there too, Jeremy, before you
yeah,
pop on the rental side of things, I have talked to a few people that they own a lot of rental properties. That's just a lot of what they own. And they're nervous right now, not because of a price drop, but they're nervous because if the unemployment rate goes way up, well, that might be their tenants, right? That might be the people that are paying rent and they may not get rent for a while, right? For the folks that are in there. So yeah, one
yep,
gentleman I talked to a few days ago, he's really nervous about that because they had concentrated a lot of their stuff in residential real estate, thinking that that was a safe investment. That's their retirement income. But now they're really nervous, actually, that wondering, well, how many of our tenants are going to stop paying rent as a result of this?
yep. We have another question on here, Josh, that says on 60 Minutes, apparently the Federal Reserve in Minnesota wanted all employers to avoid layoffs. How quickly can this happen?
How quickly can we avoid layoffs?
I'm thinking so, yeah. How quickly, is I guess as what I'm thinking this is saying is that as far as avoiding layoffs, and probably involving some kind of stimulus, how quickly can all this stuff turn around as far as helping these employers to avoid layoffs if they absolutely have to?
Sure. Yeah, and I can't speak to from a policy standpoint, I can't speak to that. I can tell you that that's one of the Federal Reserve's mandates, though, is that the unemployment rate is as low as possible. So, certainly that doesn't surprise me that they would make that announcement. But I'm sure we could all kind of chime in here, right, and talk about different businesses that we know that have shut down right now. And some businesses, when you go to zero revenue, right, and we couldn't go back to the financial crisis for businesses that suddenly go to zero revenue, a lot of companies can't make it very long, right, because they still have bills, right? They probably had financed, they
Mhm.
probably had debt and fixed expenses from real estate and so forth, and then paying employees possibly that aren't at work. So yeah, I don't know that that's going to be avoidable. I'm sure there are going to be layoffs, certainly at restaurants, things like that. I think they're doing what they can, but others have just had to shut down and tell employees not to come into work for right now, basically waiting it out. They're trying to wait it out and see if they can keep going before they run out of cash. So, from a policy standpoint, though, I know there's legislation that has passed and will pass to support small business owners to open up liquidity, certainly for them to get bridge loans and things that would help, kind of bridge that gap. But yeah, there's no way to avoid it completely. I think when we see the actual numbers come out, there's almost certainly, I can't say guarantee ever, right? Because they say we can't say guarantee, but we're going to see a huge spike in the unemployment rate. It's going to go way, way up.
Yep.
And who knows, in a quarter or two, it may come way back down, right? As we're past this thing and we're kind of getting ramped back up, there's going to be a lot of need, right, to be able to get back to normal and to be able to ramp up kind of our new way of doing things, right? There's going to be permanent changes in the way things are done going forward, and not all of those will be bad, and some of those will be actually be good things. But then there are also employers that are hiring right now. Certainly Amazon was probably the one that was featured the most this last week, that they're hiring 100,000 additional workers and may go higher. So there are some employers that are actually seeing this as an opportunity to scoop up some workers that not only are out of work, but really could be great candidates that they couldn't have even hired, right? Isn't that crazy that a month ago, the biggest problem that business owners had is that they couldn't find people, they couldn't even fill the positions. And now we're talking about exactly the opposite of that scenario.
Yep. And so here's another good one, actually. This is as far as a proposed stimulus package right now, saying if our only income is Social Security and draws from our IRA, will we qualify for the stimulus check that the government is trying to pass?
Yeah, that's a good question. The version that I've seen, I believe the answer is yes.
And yeah, I'm agreeing with that too. Everything that I've read, it bases it off of taxable income. And so that taxable income doesn't matter if it's coming from a job or if it's coming from Social Security or your IRA. Basically, as the IRS predicts taxable income and comes to your adjusted gross income, that's the number that they are basing that payment off of. And so if, of course, how much you're pulling from that or what your expenses are typically on a yearly basis, that's going to drive more along the lines if that phases out a little bit. I have heard about phasing certain levels, but to speak intelligently about that right now is, they keep changing it on a daily basis. So who knows where their actual levels are going to.
Yeah, that's always tricky. Any kind of legislation. Yeah, like last year, for example, gosh, I forget what it's even called now. What was the bill that passed at the end of last year, Jeremy?
Secure Act?
Yeah, Secure Act. So that was talked
Yeah.
about for the entire year, right? The reason why I can't remember is because it's so irrelevant right now, right? I think it's the least of people's worries right now is what's in the Secure Act. But that was being talked about and talked about and talked about. It looked like nothing was going to happen with it, and then boom, all of a sudden at the end of the year it passed. But there were a gazillion different versions of that and things that were taken in or out of it. So I wouldn't even want to go down that path real far until it's actually passed, and then we'll have to see, all right, now who actually qualifies for this? How do these rules actually play out?
Mm-hmm. Along that same note of kind of stimulus stuff, is there a chance that the Fed will increase monthly Social Security benefits for those in retirement or on disability?
That I have heard that that's one consideration is that they, and I say they, that this is Congress, right? Because when you've got that many different Congress people, they all want to kind of throw their own thing in. That could be one of them, though. That could be one of them to provide some relief for people that are retired.
Yep. Yeah, and agreed. I haven't heard anything about Social Security bumps or anything like that. I would probably guess that would be more along the lines towards their one-time, maybe two-time, I've heard, distributions to people just in the form of kind of like an extra check.
Right.
But for them to go ahead and actually increase, even if temporarily, the monthly Social Security, I haven't heard anything about that one yet. So I would probably think it would be more along the line of a one-time or maybe two-time payment out to people in general.
Yeah, I think so too. And the reason why too is that we all believe that this is a very temporary problem, right? It's a very dramatic problem, but it's a temporary problem, and the solution, whatever it is, needs to have an impact right now, right? Not 6 months from right now or a year from right now. So not to dismiss that idea that might be something that gets included in there. But the biggest motivation right now, as far as what will actually help support business owners, employees, retirees, everybody right now, is to just give them cash. And so certainly that's going to be, I think, what's going to be on the forefront of any policy.
Yep. Here's a really good question that I love. Would this be a good time to partially convert Roth conversion from IRA to
Yeah.
Roth?
Yeah, good question. Yeah, we've gotten that one from clients. So just to be clear on what that is, for those of you who aren't familiar, is that anybody, there's no limit on income or anything like that. Anybody could do a conversion of their pre-tax dollars, which are in a traditional or a 401k, something that hasn't been taxed yet, and do a conversion to the Roth version of that. So that would involve paying the taxes. That's the pain involved, right? Is paying the taxes on that income as it's moved over. But some people are seeing that as an opportunity as well right now, in that, hey, stocks are off, depending on which stocks, right, or whose portfolio. But most people are down, right? There aren't many people that don't have some losses in their portfolio, at least on paper, year to date. So the theory would be is that, well, could we do a conversion right now? Let's say that if somebody's assets in their traditional IRA are down 20% right now, maybe from the beginning of the year, would that be an opportunity that, if, especially if we think this could be a short season, could I convert those dollars, pay the taxes on that amount, and then all the money is now in a tax-free account in a Roth IRA? If we think that things are going to snap back, then all that growth will be tax-free. Wouldn't that be cool? So yes, and it's a
Mhm.
tax bet, right? You're making a bet on the taxes, on the tax rate being lower than it would be in the future if you were to pull it out. But you're also making the bet, certainly, that you're doing a conversion right now on a value that you don't know where it's going in the future. So I've had a lot of people ask me, well, kind of where's the bottom, and is there an opportunity to buy in, to do conversions? Just know that stocks could go a lot lower. Now I might be wrong, right? I could be wrong. Maybe today is the worst day, or tomorrow, or next week. Who knows where the actual bottom is? Again, we should all feel better that nobody else knows either, right? So it's not like there's secret information out there from Warren Buffett or anybody like that. But just be careful about it. Just be careful about whatever you're committing to with regard to making additional investments, taking money out, doing conversions, just knowing that we don't know how this is going to play out specifically in the short term. It definitely could be something that we see volatility for a while as this all plays out. And again, those two things have to happen. I think we've got to get more clarity on the actual fiscal policy that comes out of this, certainly. And then we've got to get clarity on what's the extent of the damage, how many people actually got infected and, again, sick or pass away, certainly. So not to minimize any of that, but I think that's really what needs to happen, because right now there's a lot of uncertainty, and the certainty will come from legislation passing, so we know what's in it, right? So we know how we're impacted for this to pass, right? For the worst of this storm that we're in to pass, so we can actually pick up and see the damage. Back in Iowa is where I'm from originally. And one thing that I'm really glad about living in Colorado is that we don't get those big monster tornadoes. And in Iowa and a lot of other states in the Midwest, they get monster, like, tornadoes that could crush an entire town. And they do sometimes. They just wipe out an entire community. And as horrible as that is, and that might feel like this to you right now, right, as far as the economy and the market, but after the storm passes, people figure it out, right? People figure it out and they clean up and they rebuild. And I think that's what everybody is going to do, right? Is that we're going to get past this, and we've got faith that things will be better in the future. Certainly, it's hard to see it right now because we're in the middle of the storm, but after we get through it, then it's a matter of figuring out what was the actual damage and how do we move on from it. There'll be good things that come from it too. Again, there are a lot of advancements right now that are happening that probably never would have happened, right? As far as different ways to use medical technology, vaccines, pharmaceuticals, things that can be now fast tracked that maybe we're on the slow track before. So, and one thing I think that we can really be grateful for right now is that, and we'll see what the final stats come out of this in the end, but what if this was this contagious and this out of control and it was Ebola or something like that, right? Where the death rate is way, way higher. There's a lot that we can learn from this, certainly, to be getting ready for something that could be worse in the future. Because I think clearly a lot of us are thinking that either we were unprepared, the government was unprepared, business was unprepared for something like this. And certainly there will be a lot of changes that happen that will make us even stronger going forward. A couple of things I'll throw out just on other slides here because it could actually answer some questions. There's a lot of mental mistakes that can happen, and again, I would say emotional mistakes because sometimes, especially if we get sucked into the news too much or social media, sometimes we can start to see things that may not actually exist, right? So just be careful about that. So, yeah, go ahead.
Good one. We got 2 more questions on here as of right now.
Right.
One saying, do you see markets that benefit from this chaos? Excess purchasing or making masks, gloves, sanitizers, anything like that. Basically, any opportunities.
Yeah, as far as individual companies, it hasn't been completely across the board. There are certain companies right now that their sales are way up, and we can probably all guess, right? Places like Walmart, Amazon, Kroger, Safeway, companies like that are all seeing their sales way up right now. International Paper, they make toilet paper, right? So there are certain
Procter and
companies.
Gamble.
Yeah, Procter and Gamble. I mean, there's a lot of companies right now in the consumer goods sector specifically that probably has been up until now, at least, that's probably been the one sector that has held up the best through all of this. Although one thing to be aware of, though, right, is that, well, that's in the past, right? If their stocks have gone way up, that's in the past. Those sales have already happened, and stock prices will be reflecting what we're expecting in the future, right? So if we think that this thing is going to be over within, I don't know, weeks, months, whatever it ends up being, but whatever that time frame is, well, if everybody has bought massive amounts of toilet paper, for example, right, that's what we're all talking about or joking about. So if everybody has bought a massive amount of toilet paper and that's their primary product is paper towels and toilet paper and all that stuff, well, there's going to be a point where nobody needs to buy it anymore, right? Somebody might have weeks, months, years of supply, right? They won't need to buy it anymore. So just be aware of that. I would definitely take a very diversified approach to investing right now. We never recommend that people get overly concentrated in one thing, even though it may seem like a sure thing. And sometimes, especially because it may seem like a sure thing, is that I could see where somebody would say, well, I'm going to just put all my money in Procter and Gamble or all in consumer good stocks or something like that, and then be really disappointed at the performance that they get in the future.
Yep. We had a really good question here. The big investment organizations are probably having more of an impact on the stock market than the individual investor.
True.
So is there any visibility to what they are doing? Like, California Teachers Union, other very large investors.
Yeah, so it's kind of interesting. There are a couple different schools of thought as far as how to invest. One of those is kind of buy good investments, do fundamental analysis on companies, and buy stocks and hold on to them for long periods of time. That would definitely be more like the Warren Buffett, Berkshire Hathaway type style of investing, where you may need to hold something for an extraordinarily long period of time before you actually see the return. And Warren Buffett's a good example, right? He was buying Delta Airlines stock, within the last couple of weeks, and it's gone down a whole bunch more since he bought it. So he realizes that. He realizes that it may take a while to actually play out. The other side, though, is based on technical analysis, and that's related to basically putting together formulas, right, and spreadsheets that tell their portfolio when to buy and when to sell. And because a lot of the market right now is automated trading, a lot of those formulas are set to certain levels that if the market drops by a certain amount or the market behaves in a certain way, up or down, it could trigger a lot of buying and a lot of selling. So I definitely would agree with that a lot of the volume in the market right now is big institutions, and some of those institutions have already set those formulas, right? They've already set their algorithms for how their portfolio is supposed to trade. And of course, there are humans behind that, right? And those humans can change those algorithms as far as how they're set up. But yes, there is somewhat of a herd mentality, as many of you have seen in the market right now, in that it could have a huge up day and a huge down day. I would not, my belief anyway, at least unless our clients are really weird and different than other people, I don't think that's the individual investor. I just don't see that as the individual investor doing rapid trading in and out of the market. I think that's a very small percentage of actual individual people, people like us, people like you and your families. Probably not something that's going to benefit anybody, because in the long run, and one slide I definitely want to get to, in the presentation here is that if you miss out on some of the best days in the market, it actually doesn't take that many days to miss out on before your return gets really, really bad. So if you kind of look at this goes through the end of 2019, of course, and you could also say, well, yeah, but if you missed the worst 5 days, well, true, right? If you could, right? But nobody has been able to do that consistently and to know when to get in, when to get out. I don't know a single person, by the way, that cashed out of the stock market in the financial crisis or 9/11. I don't know a single person who did that and was happy with it afterwards. So we don't have anybody at this point, compelling us to sell. I think that's important to think about is that the stuff that we own right now is not dollars. We own shares of things. So in your account, in my account, everybody owns shares, and those shares can go up and down in value over time. And certainly, we've got faith based on history and a lot of other stuff that those things will gradually go up in value over time, and there'll be times of turbulence like this. But one thing that I really would focus on right now is just think of it like a supermarket mentality, in that if you're able to buy more stuff right now, then what does that tell you? It's probably a good time to buy and stock up, right? If there were actually good deals on companies. Now, when you own the market, right, you own lots of different types of companies and you're able to buy a lot more shares. So for those of you who are still buying right now and putting money into the market, I think in the end, you'll be happy with that, right? Because you're able to buy a lot cheaper right now than you could have a month or 2 months ago. Certainly, as long as we've got a very long-term perspective. The flip side of things, though, is that sometimes people are worried, and a couple questions before came out about selling right now. So part of the selling could be just somebody getting scared, right, and panicking and saying, oh, I'm going to go to cash or something like that. So I don't think that's a good idea. For people who have a long-term perspective, now, if you need money next month, and I have had questions about this, let's say that you're in a situation where you unexpectedly need money next month, next 2 months, 3 months, something like that, and it's above and beyond what your emergency fund would be able to handle. Okay, well, we should talk. We should talk because things may get worse before they get better. Right now, we don't know the extent of the market damage here, but to be timing the market, that doesn't work because we don't know where the bottom is, and you would have to get two decisions right. And this is why people like Warren Buffett and others don't do it, is that you have to get two decisions right. You have to know when to get out, but you also have to know when to get back in. That's extraordinarily difficult. So the other side, though, is that people that just need money out, and they've got some cash needs. So we should definitely talk about that if you think that that's a possibility. Other clients, though, have been telling us again that we just aren't going to take any money out of our investments because we don't want to sell at these prices, or we're going to reduce the amount that we're taking out. I think for a lot of us, we're kind of relooking at our budgets, right? Because they're changing rapidly with how our day to day is going, right? We're probably not going to be doing any traveling. We're probably not going to be buying as much stuff, right? We're certainly not going to be going to movie theaters, things like that for a while. And that hurts the economy, right? So that's a tough thing temporarily. But I think for a lot of people, one side benefit that will help them get through this less scathed maybe than they would have otherwise would be the fact that they probably aren't going to be spending as much money and could take advantage of either having the opportunity to invest more or have the opportunity to not be selling stuff while it's down.
Yeah, I absolutely love this slide for a couple reasons, and I'll point them out really quick. If you look at the date range on there, this is from January 1, 1988 through 12/31 of this last year. So we're looking at 30 years worth of investing, all right? 30 years. And that middle column right there is literally just 10 days out of those 30 years. And so if you're trying to time in and out of the market, or I know I've talked to neighbors, who have said, it's driving me crazy. I went to cash until everything calms down, and a little bit of me like shrieked up inside and it was just like, oh, that hurts. But because just like Josh was saying, there's no way to know when these 10 days are going to come. But if you miss out on 10 days over 30 years, that's literally half of the gains. That's 50%. And so that's a huge number to me. That's a big reason right there. Reason to just kind of stay in the market. I know it's really uncomfortable, and we're not gonna sugarcoat that. It is absolutely uncomfortable, but still so much reason to stay invested no matter what that looks like.
Yeah, the timing is just so difficult. That's why I don't care who it is, nobody is able to consistently time the market because the market in and of itself is forward looking, right? It's predictive. So it's very difficult to be able to predict a forward looking indicator like that. Um, so yeah, I think asset allocation, re-looking at your asset allocation and your plan and sticking with it during times like this. If we kind of look at the theory behind that right now, because I could imagine anyway, somebody that may be anxious or having some fear, I can imagine somebody saying, well, why wouldn't we just go to cash and then just let it sit until things get better? And I use the quotes because those are words that people spoke back in the financial crisis and 9/11 when I talked to folks. So why not do that? Because of this slide, certainly, because the timing almost certainly, even if you get it lucky this time, you won't get it lucky the next time, right? So your actual results and kind of going back to learning from experts and learning from people who came before us certainly have been very successful. They don't do that. They don't market time. The other thing is just kind of think of it that the Dow back in 2007, the Dow had kind of topped out about 13,000 or so on the Dow. So kind of look at it from that perspective, right? Is the market still higher right now than even the top of that market? And then we went down to about 6,600 before things bottomed out. But things did not feel good along the way. And it took about a year and a half for the market to bottom, just to put it in perspective. I don't think this market's going to take a year and a half, my opinion, right? But I don't think it's going to take a year and a half to bottom. I think it's going to bottom quicker than that, certainly. And then hopefully we're going to bounce off of those prices. But let's say that somebody did, though. Let's say that during that year and a half, somebody said, Uncle, yeah, I'm cashing out. I want to get out of my stocks. So where did they cash out? Did they cash out at 6,600? Probably not, right? They probably cashed out at 8,000, 7,000, 6,600. Maybe they did, right? Maybe they cashed out at the bottom, but at some point though, they got out and then they needed to know when to get back in. Well, the stock market rallied that year in 2009, actually, after things had bottomed out. 2009 was a huge up year in the market. Well, that person that had gotten out of the market, say when it was at 7,000, 8,000, 6,600, wherever it was, maybe even they got out at 10,000 and they felt really good about that for a while. But meanwhile, they saw the market go up to what did we reach 29,000 something, Jeremy?
29, yep.
Yeah. So they still ended up losing in the end, right? Because they never got back in. And I can tell you from some of those people that did go out and cashed out, they never did get back in. So they never experienced the gains that had happened. In fact, in some of those situations, some of the people that got back in, they didn't get in for years and years and years. And finally, after after the Dow was up in the 20,000s, they said, all right, well, I'm going to get back in now. I don't want to sit on the sidelines anymore. Now look where we are, right? You can see emotionally how you could get whipsawed back and forth when it feels good to invest. It's probably not the best time to invest, right? And Warren Buffett said that we want to be fearful when others are greedy and greedy when others are fearful. To kind of wrap up, I know we're kind of coming to the top of the hour here, but a couple of things that I wanted to throw out. A lot of people right now, I'd say way more people are asking us, how can we help right now? Really, what can we do? And so community wise, I know some of you don't live in Northern Colorado, but a couple of opportunities, House of Neighborly Service, and I'm sure we could list out a bunch of organizations. These are just the ones that I'm connected to and know really well. House of Neighborly Service, certainly not only can use cash donations, but there are opportunities to help people. I'd certainly look at just at your circle around your neighborhood. Look for elderly people that maybe they don't want to go out, right? They're scared to go to the grocery store, maybe buy them some extra stuff when you're there, ask what you can get them. Certainly a lot of area churches, I'd say all the area churches are stepping up right now in helping various ways. Res.church over here, I know they donated a bunch of masks to MCR and are rallying a lot of people to donate the respirators and masks and things like that. Just highlighting them because they're very active right now and they found an opportunity to be able to help out. And certainly connect if you've got a local church that you're connected to. So any of these organizations right now are not only in need of cash donations, but a lot of practical help too. For those of you who maybe not be able to make a cash donation, there's a lot of opportunity to actually jump in there and help. They'll gladly take any of your time or certainly monetary help that you can provide. So certainly going to be a challenging couple weeks, I think, coming up. Maybe it won't be as bad as we think. Certainly, I hope that's the case, but I think a lot of us are just, hoping and praying that that the damage is minimized and that a lot less people get impacted and the treatments that they're working on will have a great impact. Also wanted to highlight a couple of things that we're doing. Again, we're doing these on Monday mornings, Q&As every week. We're also working on a state of the market, a virtual event. It'll be a webinar format, so watch for that. Also coming out with podcast very soon here within the next few weeks. It's called Wiser Financial Advisor. And again, the entire line of thinking on that is not just about personal finance, but about really how do we learn from people who have been really successful? How do we learn from their patterns, from their habits? How do we take that and make better decisions for ourselves? So I'm then leaving you with a couple of quotes. One of those is Tony Robbins. I'm a big Tony Robbins fan. He said this week, faith is not learned. It's something we are born with. Faith is what fuels us through times of fear and uncertainty. Yeah, I think for a lot of people, there's some level of fear and uncertainty. And I'll also tell you that for a lot of people, there's not. Surprisingly, there's a lot of people that I talk to that actually have a lot of optimism and they're feeling really good right now about their life and how they can help and so forth. And so that's one of the best ways to get through this is to kind of focus on other people instead of focus on ourselves and focus on the news and social media, things like that. Find opportunities to help because there are plenty of opportunities right now, and my fear is that there will be a lot more opportunities here in the next couple of weeks. So also another quote, in every crisis lies opportunity. And again, don't discount that, not only for you to be able to impact somebody else's life right now, but also you think about all the businesses right now, and there are numerous stories, but looking at big companies like Amazon, 3M, and others that are helping out. GM, I heard that they're actually retrofitting some of their factories. Tesla retrofitting some of their factories to be able to help with medical equipment and masks and so forth. So it's just amazing to be able to see how everybody's pulling together. Again, something I haven't seen at least since 9/11. I don't think this level of solidarity from everybody pulling together, not only to be able to help out right now, but knowing that, hey, we're going to get past this. It's going to be one of those things that we will probably not forget, right? Because we're being sequestered to our homes and everything is closing down, but we will get past it. And there will be a day, and this is where you want to be around for the bull market, right? For those of you who are investors and maybe wondering where things go from here, there will be a bull market. It will come someday. There will be a bottom in this bear market. I don't know where that's going to be. But I can tell you, though, my opinion is that those two things need to happen first, is that we need to get through the peak of the people impacted by this thing directly, and then we need to get more clarity on the actual fiscal stimulus and what that actually means to individuals and to businesses. So with that, make sure you stay plugged into our social media. This is not just self-serving. I want to make sure that people have a resource, right? So even if they're not a client, make sure they're plugged into our social media so they know when we're doing virtual events. Make sure you're getting our emails. You probably wouldn't be on here if you hadn't. And certainly invite other people as well. We know there are a lot of people out there that are scared and not knowing what to do. So certainly let them use us as a resource. Use us as a resource to get through this. And back to that quote by Bezos, continue to support the small business community so they can survive this. Same thing with us as individuals. I think we need to be able to support each other and to be able to get through it together, because this truly is a crisis that impacts not just every American, but everybody on the planet. So glad you're connected to us. I'm glad that you're here today. Thanks for the opportunity to visit with you. Again, keep tuning in and keep watching out for other opportunities as we continue to communicate and learn from each other. All right, that's it. Thank you. Have a great week.
Take care.